Today, we're going to be talking about Texas Instruments, famous for making calculators among other products. So first thing we're going to look at here is going to be their different ways of making revenue. So last year, they did about $20 billion of revenue. 40% of that is industrial, 25% is automotive, and 20% is personal electronics. So overall, pretty well diversified with a focus on industrial and automotive mostly. The next thing I want to show you here is their market share, which we're going to get into later, but just going off of this ranking system here, we can see based off of 2018, which is 5 years ago, getting outdated a little bit, but still their market share was 18% then, and their sales were about 2x the next competitor, which is Analog Devices. So that's a good sign there. Then we're going to look at this. We're going to see that they have 15 manufacturing sites worldwide, and they produce tens of billions of chips every single year. So the other thing I want to point out too about this is, although they're not the top of the list, they still are in a respectable place, and that is place 48 for the number of patents. So they have 910 different patents, which is always a good sign. Texas Instruments in the last 5 years is up 50%. In the last year, it's up 13%. And it's pretty much been stalling out right around this $170 mark. It's been trading at this level since about the beginning of 2021. And the first thing we're going to look at is their revenue and net income. Revenue in the last 10 years has grown at an average of 5% per year. Net income has grown at 17% on average. Their PE right now is 20. This is on a 2023 forward basis. They're trading at 23 times earnings, and their normal range is 14 to 22, which you can see right here. So I would consider this a bit overvalued, not a great value at the moment. The other thing to look at here is, although the stock has been flat, their earnings have actually gone down, and they're expected to go down to $7.45. So that's why the stock is not, the rally kind of stopped after that. So that's why I don't really see this as being a great deal at the moment. But if we keep going, I would consider this company innovative. They obviously did a good job gaining market share and coming out with new products. Their market share is about 18%, at least it was 5 years ago. And then the return on invested capital, super strong at 40%. Their equity is growing respectably. Their equity is not over 15% of the market cap, though. It's just under that. I believe it's 10%. So not bad, but not exactly where we want it. The share count has been decreasing. I believe about 2% per year it's been decreasing, so that's good. Surprisingly, this company actually hit this one, which is their assets are 2x their liabilities. If we want to take a look at this, what we're going to see is that not many companies can do this, but their assets are 27 billion. I believe it's even more now. Yeah, 29 billion, and their liabilities are only right under 14 billion. So that's very good. Their profit margin is one of the highest I've seen, 43%. Cash receivables is almost double what their income was last year. And their dividend, the payout ratio is 53%. So that's what I like to see. The company is over 20 years old. They're founded in 1930. And then their free cash flow has been growing at an average of 7% per year. So overall, I would be interested in buying this if the stock were to come down, or if their earnings goes up, let's say in a year from now, and the stock is still trading around this price, then it would be a good deal. But for where it's at, what the earnings are expected to be this year, I would say I would like to buy this, more along the $150, $140 range. So I'm going to keep an eye on it, but the actual numbers, the performance of the company are phenomenal. The return on capital numbers, what they're doing with the balance sheet, the way they're growing free cash flow and net income, all that's strong. It's just the valuation is a little bit rich. So that's my take on Texas Instruments. Thank you for watching, and I will see you in the next video.